Hey guys, what's going on? Welcome to the Profitable Traders. I'm Edward, the Profitable Traders Coach. In this video, you're going to learn Confluence Trading and how to use Confluence to increase your chance of winning. I'll also share with you the results of the trades that I took last week, as I promised, and also the analysis of the trades in my radar. If that sounds interesting, hit the subscribe button and the notifications bell so that you don't miss any of my future uploads coming up. Confluence trading is when you combine multiple trading techniques that tell the same story, anticipating to increase your chance of winning. Let me show you this example of pound yen. I've circled it already so that I don't waste much time. I want to make this video as short as possible. Let's say there are 3 different traders looking at this market that I've just circled. So the first trader is a trend line trader. So he trades at the breakout of a trend line. So he draws his trend line, joining 2 different swing highs and swing lows. And as he watches the market making lower lows and lower highs, he's just waiting for this market to break above the trend line. Now when he breaks above this trend line, and also he's a conservative trader, he waits for the pullback that retests this trend line. Now he looks for an entry reason and expects this market to go to the upside, at least touching this previous level of structure. The second trader trades at the key levels of structure. So what he does is that he draws his key level of structure, which is the support level here. Now when support level. Now this trader sees this market making lower lows and lower highs, lower lows and lower highs, lower lows, and when this market broke above this key level of structure, the support level, he waits for the market to pull back to the support level and expects this market to go to the upside. Now the third trader uses the analysis of the 2 traders. He uses the analysis of the trend line like the first trader, and uses the analysis of the second trader at the key levels of structure. Now who do you think will have a higher chance of winning if they all took 100 trades each? Obviously the third trader. Why? Because he's using multiple trading techniques to make a decision of trading. So that's why confluence trading is much important. You don't just make your trading decision on one analysis, but you make multiple analyses so that you can enter the trade confidently. The trade that you see on the chart here is a trade that I took last week, and it's based on 2 different strategies. The first strategy is what I call 50-50 rule RSI strategy. I made a video about this strategy last week, the RSI strategy. I came up with this strategy. This is my own strategy, and if you want to learn more about this strategy, I'll put a link in the description below, and also a video may pop up in one of the corners of the screen so that you could have a deeper insight into this strategy. But basically what I do is use the RSI indicator, the relative strength index, and this relative strength index, I change the input length from 14 to 50. Now after I've done that, the RSI values range from 0 to 100. So I put a horizontal line, which is the red line you see here, at the 50% of the RSI values. So let me zoom in so that you could understand what I mean. We have exactly this is the 50% of the RSI value, so I put this horizontal line exactly there. Then after have done that, I look at this RSI oscillator, and when this RSI oscillator is above the horizontal line at 50% of the RSI values, I look for the buying opportunities, and when this RSI oscillator is below this horizontal line, I look for selling opportunities. That's how simple this 50-50 rule RSI strategy is. Another strategy is purely based on price action. What I do is that I go to a higher time frame and determine the direction of the market. In this case, the market is making higher highs and higher lows. Now, when the market breaks above this resistance level, I wait for it to retest this level and then find my entry reason to go to the upside. That's how I took this trade. Let me take you to the 4-hour time frame where I make my trading decision. Now, as you can see, this market made a higher high, a higher low, and a higher high that closes above this resistance level. Now what I did was to wait for this market to retest either the previous level of structure, which is the resistance, or the previous level of structure, which is the support. The break above this resistance level wasn't that significant, so I was expecting this market to at least retest the previous level of support here. So it happened. I made this nice engulfing candle, bullish engulfing candle. That was my indication that this market will continue to the upside, and I took the trade. So I expect this market to go to the upside. Why? Because number one, my RSI oscillator is above this horizontal line, and second, this market is making higher highs and higher lows, and it has made a pullback to the previous level of structure. Third, I've seen my entry reason here, which is the engulfing candle, the bullish engulfing candle. So these were the three reasons, I could say the three trading techniques that I have used to enter this market. Now, is this trade going to be a win? I don't know whether it's going to be a win or a loss. What I do know is that when I take 100 trades based on the same strategy, on either strategy or both strategies combined together, I will have more than 60% chance of winning. So I took this trade. If it's a loss, I would take another trade based on the same analysis. And that's how powerful Confluence Trading is. With that being said, let me show you the results of the trades that I took last week. I promised you last week that I would share with you the results of the trades that I took, whether they are winning trades or losing trades. The first trade was dollar Canadian. In dollar Canadian, the market was exactly here when I took this trade. I took the trade exactly at this bullish engulfing candle. This is exactly where I took the trade, and I was expecting this market to come up here to the upside. I put my stop loss 1 HR below the swing low, and the market really went up well, close to hitting our target, and all of a sudden reversed and stopped us out here. So this was the trade that I took last week. It turned out to be a losing trade, and the analysis remains the same. And on here was a market in a range, and as this market was in a range, I was expecting to be buying at the support level and selling at the resistance level. When the market was here at the support level, I thought this market would come up here to the previous level of structure here. It indeed came closer to the previous level of structure before it reversed its direction. That was a losing trade. And guys, it's okay to lose trades, because if you have a strategy that gives you more than 60% chance of winning, you have about 40% chance of losing. Trading gurus also lose trades, but in a long run they make profit. The second trade that I took was Aussie dollar. This Aussie dollar was based on counter trend trading. What I did last week was to identify my key levels of structure. Here was my resistance. Before there was breakout here, then it turned into support. This was my resistance level. This was my support level. And as the market was going to the upside, as this market here was going to the upside, making higher highs and higher lows and higher highs here, and I saw this rejection, I was expecting a counter trend to take place here. That was a small correction here, at least up to this level here. So what happened here, I entered this trade here at this level, and it came exactly my way before it reversed the direction and stopped me out here. Actually, my trading position was in 4-hour time frame. On this 4-hour time frame, I was seeing higher highs and higher lows. When it reached this level of resistance, I saw this nice bearish candle here that was bigger than this candle. So I was hoping of a counter trend trade that would at least touch this previous level of structure. The market came down here and reversed and stopped us out. And these were the trades that I took, and they were all losing trades. And in trading, guys, every strategy has its drawdown. There will be times where you'll have a drawdown, and there will be time where you'll have winning trades in a row. So I'm not going to change this strategy, because I've proven it in the market, in the historical data, to be profitable. What do I expect now when this thing has happened here? Now, what I expect this market to do is, now this level has turned into resistance, into support, and when this market reaches this support level here, I'll look for the buying opportunities here for trend continuation here, at least up to the previous level of structure here. So this one here is on my radar, and also dollar Canadian is on my radar as well. I'm expecting this market to reach this resistance level here that was previously support, and expect this market to continue with the trend to the downside. My price action tells me, if the market gets up here to this resistance level that was previously support, I would continue to the downside. And my RSI strategy tells me that when the RSI oscillator is below the 50% horizontal line, then I will be looking for the downtrend opportunities. So these are the two different concept pairs I'm looking at throughout this week. There might be other opportunities that I will come across throughout the week as well, but as now is concerned, these are the two different pairs I'm looking at. Guys, if this video is so helpful, hit that subscribe button and the notifications bell, and don't forget to like the video also. This will help me with the YouTube algorithm. And put your comment below to tell me about your thoughts on this content that I've shared with you. Thank you for watching.